Hi everybody, आप सभी को मेरा सादर जय जिनेंद्र. I hope you guys are doing great. In this session, you are going to learn a exclusive strategy, which is basically a breakout trading and a range breakout trading, right? And in which we are talking mostly about a bigger range which is being taken out in the market. Let's have a look at this particular image. So, as you can see in this image, that this is the high of day one and this is the low of day one. And in the second day, right, the market stays exactly inside the high and low of the first day. Now, market is set to be sideways when it is within the previous day high and previous day low. Now, why do I say that? Try to understand one thing. If we are saying that a stock is in an uptrend, when should it be called in an uptrend? For example, let's say if the high of day one is 100, then obviously on day two, you want the stock to make a high of 102, 103, right? Something like this. So basically the previous day high, they become very important for us to determine whether the stock is in an uptrend or no. And similar is the case if the stock is in a downtrend, right? For example, let's say if the stock stays in a range something like this, this is the high and this is the low of day one. What if the stock continues to stay like this within the high and low of the day one? Then it will be said to be sideways because there is no clear direction in the market. And as soon as the previous day high and previous day low is taken out, we can expect a strong momentum in the market. So if you see over here, right, this was the high of day two, right, and this was the low of day two. As soon as on the third day, the previous day high, right? So what is previous day high? The high of the previous day, basically. Once it is taken out, we can see a strong momentum. Now, so what we are going to do is we are going to look for structure where the previous day is like consolidating and the next day it is breaking the previous day high. So we can expect a strong momentum on the upside. Now, this is the psychology behind range breakout, correct? Now, let's move forward and understand about previous day high and previous day low in a detail. Now, previous day high and previous day low is an inflection point that leads to a reaction from buyers and sellers, right? Previous day high and previous day low is a point from which trend is created. Obviously, if yesterday's high is 100 and if the stock is really in an uptrend, either it should start to trade above 100, right? Or it should at least sustain the levels of 100, which is the previous day high. Remember, there was a time when newspaper just showed the open, high, low, and close. During that time, when there were no charts, right? People traded just based on the open, right? High, low, and close. That's how people traded back then. Now, I prefer the classical way of trading the high and low of the previous day. Not only it works great, but it is also much simpler and stress-free because try to understand one thing. This particular previous day high and previous day low is going to be same for all the traders, right? For example, when this previous day high is taken out, it is going to be same for an intraday trader, for a scalper, for a swing trader, for a positional trader, for any type of trader. This level does not change, and that is why it has a lot of significance, because when you draw a trend line, it is basically different for every type of trader. And henceforth, the good part about previous day high, previous day low, or for that matter even previous day closing, these important points, right, they are always going to be the same for all the traders which are present in the market. I hope this point is pretty much clear. So let's move forward and let's make a system out of this concept. Now we talk about pivot points. Now, what are pivot points? Basically, pivot points are automated support and resistance on the chart. If you see over here, right, we had the central pivot range, correct, in which we also have that pivot line and then the top pivot line and the below pivot line. Over here, we also have the R1, R2, R3, R4, right, which acts as resistance 1, resistance 2, resistance 3, and resistance 4. Then we have S1, S2, S3, S4. Now, all these pivot points, right, they are calculated based on yesterday's price action. And if you see, the best part about the pivot points, just like the CPR, is that they stay stagnant on the chart. How do they stay on the chart? Stagnant. They don't keep on changing like the moving average or anything, right? What we are going to do is we are not going to use all these pivot points, right? And the application of these pivot points can be different for different traders. What we are going to do is, let's go to the chart of Bank Nifty over here, right? First thing which I'm going to do over here is that I'm going to draw the high of the previous day. Let's say this is the previous day high and this is the previous day low. So for me, this is the previous day high and previous day low. If you can see over here, at this point of time, market took support of the previous day low and it went higher. So the previous day high and previous day low, it acts as an inflection point, not just for a breakout trader, but also for a reversal trader. Let's move forward and add an indicator which is called as pivot points, right? Now, when you go to pivot points, right, click on pivot point standard, updated, right? And once you click over here, right, there are a few changes in the settings which you can certainly do, right? So let's click on that. First thing first is this central pivot line, right, which is basically nothing but the center line of the CPR as well. Keep it black, right? And as of now, we don't want S2, R2, right, S3, S4. We don't want any of these levels on the chart, right? That is what we have done, correct? I hope this is pretty much clear. Now, try to understand one important point over here. That is, this is the previous day high. Let's say this previous day high, we are going to mark it with a different color. Now, what we are doing in this particular case is that this is the previous day high, this is the previous day low. Along with that, we've added these pivots, which is nothing but your R1, correct? And your S1. Can you see over here? You have the S1 pivot as well. Now, in case if the previous day low is taken out, we actually wait for not just the previous day low, but also the S1 to be taken out. So we are just making a system out of previous day high, right, R1, and previous day low S1. If you see previous day high R1 and previous day low S1, right, it makes a range. While if you only have the PDH and PDL on the chart, right, it is just one single line. What we want is, we want a zone. For that, what we are going to use is the pivot points. Now, once you have the pivot points on the chart, you can actually go to the settings and remove the central pivot point as well. I'll just remove that, correct? So now you have removed that as well from the chart. Now, the point is very simple. If you want to take a long trade, you want this particular zone to be taken out. Now, don't think of this as a line. Now, if I want to go long, right, if I want to buy Bank Nifty, I want to buy above this particular zone. So I will be initiating a long only above this zone, not when the R1 is taken out, right? Or not even if the previous day low is taken out. We are going to short only below the zone. So what we have done right now is that we have made a system which is basically an addition to those single line of PDH, PDL, right? We've added R1 and S1 pivot to make it a zone. I hope this is pretty much clear. The pivot points R1, S1, they are nothing but your automated support and resistance. You don't have to draw it manually like we draw support and resistance. So they are basically just there on the chart, automated, right? Now, again, let's go to the PPT and discuss the pointers over here, right? Now, if you see over here, this is the previous day low, as you can see over here, right? This particular line which I've drawn is the previous day low, correct? And over here, what you see is the S1. So what has happened is that on the previous day, so what has happened in this particular case is that on the previous day, if you see the previous day was tested once, twice, and thrice. So obviously the previous day low has been exhausted, which means buyers over here, they are very, very tired. Next day, the market opens within previous day high and previous day low. It consolidates, spends some time over here, gives a breakout, and then what we see is a strong moment on the downside, correct? I hope you are getting the point over here. You may have some queries as to when to enter, when to exit, where to keep the stop loss. All of that will be covered. But as of now, understand, we don't enter a trade when the S1 is taken out, which is the support one. What we want over here is the range. This is the range over here for us, right? And the entire range to be taken out. Same is the case on the upside. We want the entire range of previous day high and R1 to be taken out, or previous day low and S1 to be taken out in order to enter into this particular trade. Now, let's go and see some more examples. If you see over here, again, we are looking at a criteria where the previous day high is tested once, twice, thrice. Next day, see, this line is the previous day high, correct? Market opens over here, it breaks the previous day high, correct? And then you see the strong momentum happening on the upside. So the point over here is that unless the PDH is not taken out along with the pivot, which is R1 or S1 in the case of downside. So this will act as a zone and not a single line, correct? I hope this point is pretty much clear. And these are nothing but your trend trading strategies, right? I hope these pointers are pretty much. Let's move on and look at the other examples as well. Now, have a look at this, right? The next example. Again, if you see over here, it's quite an interesting example. If you see, this was the high of the last 3 days, right? So day 1 high, day 2 was completely inside the range, and then again day 3. So for 3 days, the market was consolidating. And on the 4th day, it first breaks the R1. Like I said, if you want to take a trade, you want to enter once the entire zone is taken out. So for example, in this case, the previous day high, which is this, is taken out, right, along with the R1 pivot. And understand one more important point over here. We are actually breaking 3 days high. And this becomes very, very crucial for you as a trader, because now the market itself is telling you that now you are trading above 3 days high. So it's time to actually go long. I hope that you are getting the logic over here, which is very, very important. Right. Now let's understand a few things over here. Right. And we will discuss the entry exit part as well. We are going to use 5 minutes time frame for day trading. That is obviously understood by you. Our entry trigger shall be once the zone, which is your previous day high, previous day low, along with pivot, is taken out on a 5-minute candle closing basis. For example, this is your previous day high, and let's say this is your R1. Correct? So if the previous day high is taken out, you don't enter over here. You wait for the market to break the R1 pivot as well. Only and only then you will go long. Right. Next point is the candle should give a closing above or below the zone. Correct? It should give a closing. Don't preempt the breakout. Right? Please don't jump as and when the breakout is done. Wait for a candle closing. Right? So don't just jump into a trade. Wait for a candle to certainly close below the levels. Right? Now, there are a few things which you have to understand. Be a breakout trader. That is, if the breakout is happening, right, then you are going to be a breakout trader. And when do you be a retest trader? Let's say the breakout candle is way too big, right? In that case, you will have to be a retest trader. So kindly understand these are easy pointers, right? Any which ways, let's move forward now and talk about one more important aspect about trading. As to how to enter, let's say you can also place a buy order at the high of the breakout candle. Now, what does this simply mean is that, let's say this is previous day high, this is R1. Let's say there is a breakout. What you can actually do is, if you are someone who is not very quick with punching an order, you can actually place, let's say, a buy order at the high of this particular breakout candle. What it will do is that it will give you a few minutes, right? An extra minute to calculate your position sizing, your entry, exit, and all of that. Second most important pointer over here is that you will be able to avoid some fake breakouts as well, because at times it can happen if there is a breakout, it may again come back inside the range. So you can do these few pointers. Now the most important point is where to keep the SL for this zone breakout strategy. See, the stop loss part is pretty simple in this case. We will keep the stop loss below or above the zone. Where will we keep the stop loss? Above or below the zone. And what does the zone mean over here? For example, this is your previous day high, this is your R1. Market opens over here, it breaks the previous day high, it also breaks the R1, right? You enter over here, so your stop loss will be below this zone. And what is the zone over here? This is the zone, right? This is the zone over here. So stop loss is going to be below the zone. I hope this point is pretty much clear, right? Now let's move on and talk about, so what do we mean by the zone over here? It simply means the previous day high and the R1, right? And when a candle crosses this particular zone, right? Try to understand, when the candle crosses this particular zone, you will keep your SL below previous day high and R1, whichever is lower. So basically, in simple words, your stop loss is going to be below this particular range. And obviously, you are going to keep some buffer. What is the meaning of buffer? Don't like attach. For example, let's say this level is 36,000, right? The lowest range. So don't just keep exactly at 36,000. Give a buffer of 10-15 points, right? Now, the most important next point over here is use the tool to calculate position sizing as per your stop loss. So let me take you to example over here, right? Open Bank Nifty over here, right? Let's open Bank Nifty. This is chart of Bank Nifty. Now let's, okay, this is a very interesting example. I am going to change the setting here as well. I don't want the prices to be shown, right? That's it. Right, now we have the previous day low and S1. First thing first, what do we see? This particular low of the last 2 days, right? It was basically tested, right? And not just that, what we see is that now we are trading below the 2 days low. So this is the previous day low. Let's say this is day 1 and this is day 2. So if you are trading on day 2, for you, this is the previous day low. So when this particular breakout happens, you know one thing for sure, that now you're trading below 2 days low. And that too, if you zoom out, we are clearly in a downtrend market, right? So the trend of the market is favorable. Also, the entry over here is pretty much favorable. So you can enter as and when, right, the previous day low, which is this, right, and S1 is taken out. Not when the S1 is taken out, but along with this particular previous day low. You can use this tool over here to calculate your position sizing. For us, in this case, the SL would have been 240, right? So, and if you see, the reward has also been huge, right? And if you see, the low made by the market was almost 765 points. This was indeed a jackpot trade. So you will keep the SL right above the zone. I hope this point is pretty much clear. Now you may have a query how to reduce the stop loss, which I will be discussing in the upcoming slides as well. Right, I hope this point is clear. Where do you enter? Once the previous day low and the S1, both of them are taken out, we enter into a trade. So let's continue with the PPT now. Right, now these are few important notes for the entry, right? You first thing first, the stock should open within the previous day high and previous day low. The stock in this case should not open above previous day high or below previous day low. I hope the first point is clear. The stock should open within PDH, right, and PDL. I hope this particular point is pretty much clear. Next point, the volatility is higher in the first 5 minutes. So avoid trades that give a breakout or a breakdown in the first 5 minutes candle as a beginner trader. Now, why do I say that? Because you will have to be prepared a day before the market open if you want to trade the breakout as and when, you know, let's say the first candle itself is giving you a breakout from the previous day high and R1, right? So you need to be very alert and you need to be very good with your execution skill over here. So in the beginning, I would recommend that you avoid the breakout which happened in the first 5 minutes. However, with experience, you can trade it as there is good momentum in the morning, right? For example, it's very simple. For example, let's say the previous day low, it has been tested multiple times, right? And the stock is closing exactly at these levels. You know, in the morning, it won't even give you a chance to enter, right, later. So you know the overall trend is downtrend. And if the stock is closed over here, maybe tomorrow, next day itself, it will open the previous day low in the very first candle itself. Let's see this example, right? One of the example as to when it usually happens that the very first candle itself, it breaks the zone. So let's go and have a look at some examples. So as you can see over here, this is the previous day low, right? And this is basically the S1 pivot, right? So the very first opening candle breaks the previous day low. And as you see, we are not just breaking the previous day low, but we are also breaking the last so many days low. Right now, basically, we are trading below the last 4 or 5 days low. So what it simply means is that now we are in a good downtrend, right? So if you have already pre-planned this, right, you can enter in the opening candle. But remember one thing, the volatility will always be like this in the opening candle breakout. So once you get experience, obviously, you can trade this. What matters is where is it closing. If the stock is closing near its day's low, then chances are very high that the opening candle itself will give you a strong downside momentum. I hope it is pretty much clear. But in the beginning, you can avoid to trade this as you get a hang of the setup and also the morning volatility. You can trade this in the opening 5 minutes candle itself, right? And if you look at the size of the candle, right, you can clearly see that it's a very big candle of almost 200 coins. कितने candles हैं? 200 coins की ये एक candle है. ठीक है, वापस चलते हैं हम PPT की तरफ ताकि मैं जो भी points है वो एक साथ cover कर लूं. Now there are few other pointers. We are just going through it. For example, if the stock, right, this is orange line over here. This is the previous day low and this is the previous day high. So which is the first rule? Write it down, guys. The first rule is the stock should open within previous day high and previous day low. I hope this point over here is pretty much clear. The stock must open within previous day high and previous day low. What is the second point? Yes, as I said, the morning volatility, right, can be very, very tricky to trade, as you can see in this particular example as well, right? The first candle itself is breaking the previous day high and the R1. So basically both previous day high and R1 are taken out in the very first candle itself. And you would see that the market then started to become a little choppy and eventually hit the SL as well. I hope these pointers over here are pretty much clear, right? And the next point over here is that when the breakout is happening, right, and if there is good consolidation which is happening just before the overall breakout, that is always a good and obviously a positive high probability sign of a breakout, as we see that in the swing trading concept also and the other concepts as well, right? Let's move forward and talk about this one, previous day high and previous day low. Like I said, they don't just act as a area of breakout, as we saw that how markets took reversal exactly from the previous day low in the very first example, right? So they are basically inflection points which either leads to sideways move or trending moves, right? Both previous day high and previous day low, they act as a support or resistance. Logic of fresh levels and multiple retest levels is applicable here as well. For example, very simple, if I know that the previous day high has been tested many times, then if next day, if the previous day high is taken out, then the chances are very, very high that it's going to be a strong upside momentum. Previous day high and previous day low, they act as a strong reversal areas. Now, as we saw in that particular image when we were speaking about previous day high and previous day low, we saw how market took rejection exactly at the previous day low and it came up till the R1 pivot as well. As we saw, the market took support exactly at the previous day low and made a good upside momentum till R1, which is resistance 1. I hope you're getting the point. And if you see the market takes rejection at the upper range, which is the previous day high R1 range, it consolidates over here, gives a breakdown, and then, right, we see that it makes a good fall. And these zones, right, they act as a very, very good reversal areas as well, right? I hope you're getting the point over here. Now, both previous day high, previous day low, they act as a strong support and resistance. The logic of fresh levels and multiple retest levels is applicable over here as well. Very simple point. Now, what we will do is we will simply go and, let's go to the next conversation, right? If you see over here, they act as a strong supply and demand zone, right? These are just the images, very similar to the examples that we just saw over here, right? Can you see over here, the range acts as a very strong supply and demand zone. The market is taking rejection over here, consolidates over here, gives a breakdown, then again a very, very strong fall. So if you are a consolidation and a breakout trader, right, you can actually, look for consolidation and breakout at the areas of the previous day high and R1. Very, very simple. So you will see, and obviously one more important thing over here is that it is not a holy grail, right? So if the previous day low, which is this one, and your S1, it's taken out, right? It is fairly possible that it will give you a reversal. It again gave a breakdown. It again came back inside the day. Also, what we have to understand is that fake breakouts, they are going to happen. In this particular case, what we see is that the previous day low and the S1, they are taken out, and that too when the market has spent good amount of time over here. It broke out, right? It breaks out from here and then it comes back inside the range, hits the SL, again gives a breakdown, again comes back inside the range. So when the volatility is going to be against us, we are likely to see that our stop loss may get triggered, right? For that, we have to be prepared and we have to know our system, right? Our system inside out, correct? Now, let's move on and, again, just revisit all the rules. So that is pretty much clear. Now, what are the rules of the game, right? First of all, this is a breakout trading setup in which we expect strong momentum. Remember one thing, along with previous day high, if you're actually breaking a bigger range, something like 2 days, 3 days, 4 days high, that is obviously a better range, or you can expect strong momentum in that case. So I'll be showing you some examples of that particular case as well. So what is the first rule? That Bank Nifty, right, it should open within PDH, right, and PDL. What does it mean? Right, I'll just take you to the chart over here. Let's go back. Right, let me take you to the PPT only because there we have shared a better example. Now, understand over here that this is the previous day low, correct? Now, the stock should open within previous day low. Now, this is the right example over here. This is your previous day low. The stock opens outside previous day low. Now, remember one thing. We are talking about PDH, right, and PDL as a range and not R1, S1. So let me give you an example over here. Let's go to the chart of Nifty randomly. Perfect. Over here, if you see, the stock has actually opened within previous day low, right? So this is the previous day low range and this is the previous day high range. It opened over here, gives the breakdown, then it is valid. Let's go and see some more examples. In this case, the stock has opened outside previous day high. Can you see this was the previous day high? It opened outside previous day high. Now, this is an interesting example. What you see over here is this is the previous day low and this is the S1. In this case, the Bank Nifty opens below previous day low, but within S1. But as per the rule, right, if it is opening outside the range, we do not take the setup, right? We do not really take this particular setup. So we want the stock to open within previous day high and previous day low. If it doesn't open within this range, it is not valid. Even though it may open within the S1, like that is above the S1, right? It does not matter. We want the stock to open within PDH and PDL. I hope these few pointers are pretty much clear, right? Let's move forward to the next rules. The second rule is obviously that the breakout, right, or the breakdown is high probable if it is breaking a bigger range, whereas 2 days high, 2 days low. You can actually take a swing trade, short-term trade, if it is not just breaking previous day high, previous day low, but the previous 2 days high, 2 days low, right? So these are important pointers, right? Because they are firm, right? The previous day high and the previous day lows, they don't change, right? That is the next point. Now, let's move forward to the stop loss. Stop loss will be below the zone, correct? Next, below or above the zone, right? We can just put it over here, below / above the zone, right? I hope this is pretty much clear. Moving to the next point, breakout with consolidation are always high probable, right? Now, what we mean over here is that, let's say this is your previous day low, right? It can happen that the Bank Nifty opens at previous day high and it shows these continuous 3 candles, right? And then breaks the previous day low. In such cases, chances are very, very high that your stop loss may be triggered because market can reverse, because market just cannot keep going down like a lift, right? It will come back, retrace a bit, and then continue its downside momentum, right? So these are few easy rules, right? Nothing beyond that. It's a very simple setup, right? What you have is previous day high and R1 on the chart, previous day low and S1 on the chart. The stock should open within PDH and PDL. That is a rule. I hope you got the point over here. Let's move forward and now let's talk about the exit, which is one of the most crucial areas over here. So how do we actually exit a trade, right? How do we actually exit a trade? First thing first, you can go with the fixed risk to reward. Now, what exactly do I mean by risk to reward over here? Let's say if your stop loss is 100 and you choose to book your gains at 100, this is called as a risk to reward of 1:1, right? And let's say if you choose to go with the risk, right, to reward of 1:2, that is if your stop loss is 50 points, you try to go for 100 points, right? In that case, basically you are trying to achieve twice your risk as a reward. यहाँ पे basically आप 100 रुपए का risk लेके 200 रुपए कमाने का सोच रहे हो, and that is one way. So guys, now let's talk about the most critical aspect about any trading system, which is exiting a trade. Now, when we talk about exiting a trade, we are simply talking about, what is the kind of risk to reward you're looking for? If not risk to reward, then, where do you actually plan to exit a trade at the nearest support, resistance, or do you want to run the profit, right? This is what you do as a trader, right? So the first thing first is your risk to reward, which is which is simply how much are you willing to risk to achieve a certain amount. Let's say you risk 100 points to achieve 100 points as a target, then that risk to reward is 1:1. Probably you risk 100 rupees to gain 150 rupees, then that risk to reward is 1:1.5, right? So it depends on traders to trader. However, I will not recommend a fixed risk to reward to anyone, because fixed risk to reward is a myth. I don't think it's a certainty. Moving forward to the next point, which is the nearest support and resistance or pivot, right? So basically, let's say you have taken a previous day high and R1 trade, right? And then there is, let's say, a very strong supply zone over here from where the market would have fallen, let's say in the previous 3 to 4 days, right? So if there is a breakout, you can look forward to booking your gains at the nearest resistance, right? The next part, which is quite interesting, which is using the pivot points. Now, if I take you to the pivot point setting, right? So guys, simply go to the pivot points over here, right? And then click on S2 and R2. Let's say you have taken a breakout trading over here, right? Which is your basically S1 taken out. Also this is previous day low and S1. Both of them taken out in the opening candle itself. Let's say you took a trade over here because the last 2 days low was taken out, right, by the very first candle itself, right? And then you can book your targets at S2, which is your nearest support, right? So you can use these automated supports, so you don't have to draw the random lines on the chart, right? So you can use pivots to exit your trades. I hope you have got the point. You can use S2 and R2 to exit your trades. Let's go and see some examples that we have on the PPT, right? So let's have a look at this particular example. Quite an interesting example. As you can see over here, market opened within, right? Market opened within, the previous day high and the S1, right? And then it broke out. Sorry, over here, if you see, this is the candle, right, that broke out previous day high and R1. And you can exit at your resistance 2. And if you see, from resistance 2, the market started to fall very, very sharply. So the market fell quite sharply from the levels of R2, which is nothing but your resistance 2. So you can use this as a level of booking profit, right? And over here, if you see, market formed a double top kind of a structure, broke down, and then gave a very, very strong fall, right? So I hope this point is clear, how to use the pivot points. Now, the third point over here is very, very interesting. The reason being that this particular strategy allows you to book the profits at 1:1, basically a style in which you are covering, your profits with comparison to the risk that you have taken, right? So basically you're covering up yourself with the risk that you've taken. And in the second lot, right, let's say you're doing 2 lots, or let's say, just the remaining half quantity, you are trying to run the profits, right? So if, let's say, if there is a breakout, right, and then you are trying to run the profits. How to run the profits? Obviously, there are few criteria which we are going to learn, right? And running the profits obviously is not that easy. You already know how we run the profits in swing trading or even in day trading, right? So there are basically 2 ways in which we exit, or you can say we run our profits, right? So in this case, let's say there is a breakout, right? And let's say it's a big breakout, right, of, let's say, the last 3-4 days. When there is a breakout, you would actually wait for the nearest retracement, right, to be taken out as your trailing SL. The other way to run the profits is by using an indicator which is called as exponential moving average, right? Now, for day trading, especially in option selling, right, you can use a 15 exponential moving average, right? And in options buying, as per your trading psychology, let's say you are not someone who's able to hold the trades for longer, then you can use 10 EMA, right? And there is something which I'm going to suggest you, which I simply do when it comes to running the profit, is I book half at 1:1, and I would let the remaining be open till day end. So once I've achieved 1:1, I make my entire day risk-free, right? So in case if the market reverses, I will not lose. And if the markets, if, let's say, if the market gives something like a 2000 points, then in that case, I will be able to grab some really crazy returns. Booking half quantity gives you the courage to hold on to the trade for a longer period of time, right? Let's move forward and discuss the next points. So we discussed how you can exit as per the pivot points, right? Now let's talk about running the profit, right? Running the profit simply means that you stay in a trade until unless the price has strong momentum. The psychology in running profit is to capture a big profit, right, when the market moves in your favor. The advantage of running profit is that your winning trades are going to be big enough to take care of your losing trades. The con of running profit is that your hit rate, मतलब आपका जो winning rate है, is going to be less, Further, not knowing where to exit, right, before entering a trade is always going to be very, very risky. There is one thing which I clearly believe, and that is that uh, as you grow as a trader, right, for you, it's best to believe that you do not know how far the markets can go, and you want to capture the upside momentum, right? Because these momentums, they come rare, and whenever they come, right, you can grab some really, really crazy momentum. So let me explain you this one trade that we recently took, right, in Bank Nifty. So let's go over here. I'm just going to remove all the indicators over here. Let's go to daily time frame in Bank Nifty. Now, if you see in Bank Nifty on this particular day, can you see over here, right? We broke out of this level and we saw this big, big momentum candle on this day as well as this day. So let's see how we could have captured this 31st of December, right? Let's go over here. So guys, as you can see over here, market opened above the previous day high, correct? So basically we have a gap up opening. After the gap up opening, the market retraces, again gives a day's high breakout. And after that, just see the kind of strong momentum that we see over here. The market actually goes on and makes 700 points in our favor. Now, how can we actually, hold on to such a long trade? It's very, very simple, right? If you have booked half quantity, right? Let's say you do 2 lots, and if you have booked half quantity, that is, you have booked 1 lot, you will get the courage to hold on to the next lot for maximum benefit. And that is the power of, having the tricks to, and this is the power of holding on to the trades for bigger profits. Because once you achieve, right, this one big profit, then you're taken care of the next, couple of months as well. Because you can easily grab, the biggest moment that will come in the market, right? This move, right? The biggest candle which you see on the chart, right? You will be able to catch it with this setup, right? Does not matter, where like these particular big candles, this big candle, right? You'll be able to capture all of this. All you need as a trader is some patience, right? And because obviously it's not going to be this straight momentum, right? Particularly these green candles. So how to catch these green candles? Look at this particular red candle. How do we catch this type of, big green candles? And once you have caught these, right? Once you have caught this, तो आपको टेंशन लेने की जरूरत ही नहीं. आप सिर्फ कैंडल की साइज देखिए, 1900 पॉइंट. इसको कैसे कैच कर सकते हैं? मैंने आपको बताया, I prefer this particular style of trading where I enter a trade, I exit half, right, and I let the remaining one be open till day end. And this is something which actually works as well in the longer run for the system as well. Let me take you through a trading toolkit which I had shared with you, right? So let's go over here. So here I have the back tested data, right? So I'm just opening there. Now this is one of our system traders account, right? So guys, this is the back tested data, okay, which will give you good insights, right? This is prepared by our, previous system trader, a very detailed understanding of the system, his entry time, right? The buy order, sell order, the exit time, the entry, SL in points. But the most interesting point over here is this: the exit at 1:1, exit at day end, PNL for 1:1, and PNL for keeping the trade open till day end. Let's go down and see the, observations by the system trader. Not just that, we also have this, re-entry criteria also mentioned, which I will be discussing soon. Right, let's go down and see. This is the exit as we saw as per 1:1, right? And if you see the reward, right, it is 3 times if you let your trades be open till the day's end, right? The rewards are 3 times than the risk to reward of 1:1. And that's why, like I said, I prefer to, just, agree to the markets that I don't know what is the top or what is the bottom. And I want to catch this entire ride, right? So that is the plan over here. Also, there are a few things which have been mentioned over here, what are the average number of trades per month? It can go from 7 to 10 as well, because let's say 11 is the highest, 7 is the lowest. So 9 trades a month probably, right? Maximum winning streak is 10, maximum losing streak is 4, right? What are the maximum profits? 700 to 900 profits, and maximum loss is 200, right? So I hope you have got the point over here. There are 3 re-entries also. So what is re-entry? I'll be discussing, but I hope you have got the point over here, and you can actually mention, the observation in the particular notes as well. right? So let's go over here, right? I'll just mention in this particular segment as well. But for now, what you can do is you can simply, write down on a paper that leaving the trades till day end has actually, chances of giving you much bigger profits than exiting at 1:1. Now, only a few traders, I believe, can do this, because holding to the trade till the day's end is something which requires a lot of patience, because you're going to be in the trade till 3:30 if the market moves in your favor, right? 3 o'clock, 3:30, right? Anyways, let's move forward and continue with our learning, right? So we have covered most of the points now, right? We spoke about how to run the profits and how to exiting the trade. And we can actually mention our observation over here that exiting the trade till day end, right, is highly profitable compared to exiting early. Now, remember one thing. Also, one thing which this particular system, which is where you're exiting the trade till day end, also adds is that, let's say you're a working professional. You've exited something at 1:1, the next trade, right? You just don't even have to watch the screen. You're going to keep it open till day end. And this is what I do. Like I told you in the beginning that this is one system which I've been following. I have to agree to this fact that the previous 3 years, right, 19, 20, 21, they were amazing. Again, 2018 was not that great. And again, 2022 now is not that great. So this is how the markets move. Let's see how this year turns out to be, but I have good expectations from the market going ahead. Right now, let's move ahead and continue with our understanding. So we just understood about, leaving the trade till they open. Now, what we are also, understanding over here is the use of the EMA, which is simply you can use any exponential moving average. In this case, we are using the 15 exponential moving average, which tends to works better. Now, the only rule over here is that the particular breakout candle, right, which is closing above all the resistances, and then the later up move, right? We want a candle to close below the EMA as an exit trigger. These candles, right, which touch the EMA has no exit trigger, right? This is not an exit trigger. You want a candle to close below the EMA. You can just read this out. It's quite simpler over here, right? We are going to use 15-day exponential moving average, right? And everything is written over here. It's quite simple. Same as we discussed in the stocks as well for intraday. You're going to stay in the trade until unless the price stays above or below the moving average. And as and when the price moves below or above the moving average, you will exit the trade. Now, remember one thing over here. What I simply mean over here is that not as and when the candle closes below or above the moving average, we will exit the trade. Now, one more important point over here is that you're going to use the moving average, right? See, the purpose of moving average is to run the profits. And when do you run the profits? Once you have achieved at least 1:1, right? Don't use EMA in the very first candle itself, right? So that is the part about it. The advantage is that one fine day you will get a windfall gain and you will catch the biggest profit in the town. The only disadvantage over here is that you have to actively watch the market. The M2M swings, right? When the market is moving like this, the profits, it will just keep going up. It will keep coming down, again go up. So this can have a sort of impact on your trading psychology, right? And not knowing a predefined target is a little difficult to handle in the beginning as a trader, right? But any which ways, it's an easy way to trade. I believe once you take 10 trades with it, you will understand the importance of this particular system. So this is an exit plan that any beginner, right, he can follow. He can exit 50% of his quantity at 1:1 and let the remaining ones run. Second thing is he can use the remaining quantity to run the profits by using the EMA or by keeping the trade open till day end, right? Keeping the trade open till day end obviously involves emotions, right? But as you spend some time in the market, you will be able to handle. So guys, now that we have understood how to trade when the market opens within previous day high and previous day low, it's time to understand how to trade the gap up and gap downs. Now, already you must have been practicing the gap up, gap down in stocks, and I would request you to kindly continue that in stocks only. In Bank Nifty, the position sizing is very different, right? It's not like stocks because here we are dealing with lots and not fixed quantity, right? So let's get started with this. Now, there are two situations, obviously, when you can trade the opening candle itself. Let's say, the previous day high is tested multiple times, and if it's breaking a bigger range, something like a head and shoulder type of a formation or a base formation on a daily time frame, then maybe you can enter in the opening candle itself. right? And if there is a breakout, let's say there is a breakout, and then there is a continuation on a 5 minutes time frame, which is nothing but our N pattern. Now today, actually, while I am recording this video, it has happened, right? And this is one trade which I discussed with the learners as well. Let's go and talk about it. Let's go to 5 minutes time frame in Bank Nifty. So guys, this is today's chart of Bank Nifty. If you see Bank Nifty, yes, it opened within the range, but very first candle gave a breakout. Now you don't really have any space for keeping a SL. In that case, you should wait for a retracement, then a breakout, right? And you will get a SL over here to keep, and then probably you can look for some bigger gains. So this is nothing but your gap up opening. Market goes up, it retraces back, and then gives a day high breakout. However, the structure in Nifty was very good because here the only concern was it broke the day's low, right? And let us go and have a look at the chart of Nifty, which was a very clean chart, right? And this is the kind of structure that you always look forward to. Correct. So let's have a look at this. Market opens with a big gap up. Can you see over here? It opens with a big gap up when you look at yesterday's closing price. So market opens, gap up, consolidates, and then gives me a good breakout of the upside. And just look at the kind of move that we have seen in Nifty. The same kind of structure had happened in Bank Nifty, we would have gone very, very aggressive today as well. Let's move forward and take some examples from the PPT as well. Right. So when you look at these examples, you will notice one thing over here. Right. First example. Now, these are all the recent trades that we have taken because we have a system trader who takes all these trades in our demat account, right? If you see market opened, the very first candle breaks the previous day low, just like today's case where the market in the very first candle has broke the previous day high. In that case, we wait for a good, pullback, and then we entered at this, and this was the SL, and probably in the next few minutes, our stop loss was taken out, right? Let's move forward and talk about this particular case over here. Again, if you see first candle breaks the PDH, then there is retracement, then there is continuation. So we enter over here and we actually, kept the position open till day end. As we have discussed earlier as well, that, leaving the trade till day end is something that works out in the longer run, right? I hope you've got the point over here. Again, this is one example of, Bank Nifty opening below previous day low. Now here the open itself is below previous day low. So what we do, we don't enter over here. We wait for a small pullback. We enter at the low of this pullback candle, right? And let's say over here, this is going to be the SL, and we have achieved a decent RR in this case as well. So these are the gap up, gap down scenarios, right? So if you see over here, market is in a super uptrend, right? Breaking all the recent swing highs. So when you look at this particular chart on a daily time frame of Bank Nifty was actually going and moving something like this, right? And in such case, when the stock opens exactly above the PDH with a bullish pin bar, right? You get a small pullback. Now these pullbacks are very healthy, and you enter as soon as the nearest swing is being taken out, right? So I hope you've got the point over here. This is very important if you're someone who wants to catch a trending stock, right? You can do this in stock as well. So today we saw the same type of structure happening in Coal India as well, which came back which comes in our scanner as well, right? So this is a very high momentum strategy, right? So you should apply it. So guys, this is the chart of Coal India. As you know, it opened above the previous day high. This was the previous day high, right? It opens above it. Then, it retraces a bit, then gives a breakout. Not just that, it again goes up, shows you good amount of retracement, and then a continuation. And just look at the kind of momentum that we see. Now, remember one thing. When there are these big candles forming, right? For example, Eicher Motors yesterday, right? One thing which you will see, which is common in both these examples, is that the stock, when you're taking a trade in these stocks, right, for example, it is breaking a bigger range. So when this stock comes in the scanner, it is breaking a bigger range. And if you see yesterday as well, it broke out. Can you see over here? It just breaks out, consolidates, gives a breakout at these levels, and then just see the upside momentum. It consolidates over here, gives a breakout, and then the momentum keeps on continuing. Can you see over here? The momentum keeps on continuing. Again, what happens the next day? First candle itself breaks the previous day high, it consolidates, gives a breakout, and then again a good upside momentum. So whenever you want to catch a trending stock, this is how we do it. I hope you've got the point of gap up patterns and gap down patterns, right? And one thing is over here, which is very important, that gap up patterns actually work even better than gap down patterns, because markets, they tend to move up a little slower compared to the way they fall on the downside. I hope this is pretty much clear, right? Talking about the next topic over here, which is very, very interesting, right? Before that, we'll discuss the key pointers. Previous day high and R1 and previous day low S1. It works best when the previous day high is ranging. That is, the previous day is ranging. If the market is consolidating within the previous day, then chances are very high that we may see a good momentum. Henceforth, in most cases, we decide a day before the market opens if we were to take a trade tomorrow or not, if there is an entry trigger. So just have a look at this example. On the public Telegram, I had updated something yesterday that we are going to take a trade, right? Plan for tomorrow is if previous day high is taken out, we will go long. Now, obviously, only you understand how to take the previous day high breakouts, right? So understand these important pointers as to how we actually plan the trades, right? So a day before the market opens, if I know that yesterday was a trending day, right, and overall the market is still in a range, then I would not enter as and when the breakout is happening, right? I would always wait for retracement. Not just that, what we also do is we always plan the trade a day before the market opens. That is again one thing which I have already told you. In case of previous day high, previous day low S1, not every previous day high R1 or previous day low S1 you want to take. Just look at the prior trend. If it is consolidating the previous day, chances are very high you will get a very, very strong upside momentum, right? Henceforth, in most cases, we decide a day before the market opens. Previous day high and previous day low S1. It works only for Bank Nifty. Kindly don't use it on Nifty 50. राइट, ये निफ्टी 50 में काम नहीं करता है, ये बैंक निफ्टी में ही काम करता है. निफ्टी 50 में अगर आपको इसको यूज करना है तो आपको बैक टेस्ट करना पड़ेगा. I have not used this system on Nifty 50 because Nifty 50 is a slow moving index compared to Bank Nifty. But yes, those gap up patterns and patterns, the price action works everywhere. But the rule-based setups, it does not work in Nifty. Gap up, gap down opening can be a little tricky due to big risk involved. So ensure that you start applying this on paper first, or you can actually, I have given you a scanner already, right? So apply this particular strategy on those stocks which comes in the scanner, right? Now 2022 has not been the best year for this system. The volatility has been at its peak, right? ये जो system मैं आपको बता रहा हूँ, ये system ने best perform नहीं किया है 2022 के अंदर. It is still positive, but it has not performed as it always does, right? But now I'm going to tell you something which has actually increased the overall returns of this particular system. For this, we are going to use two things. One is your obviously the day's high, correct? And second, which is most important, is your exponential moving average. The logic of this particular trade is very simple. I call it the re-entry system, right? And this is very, very good for options buyer. Very, very good for options buyer. You can actually, double, triple, and even you can do 4 times your premium, right? Your option will double, triple if you follow this particular strategy. Because in this particular strategy, first thing first, the trades come like 3 times in a month. So obviously 30 times in the entire year, right? And I told you one thing about options buying. Options buying is not something which you do every day. Why? Because the probability is 30%. So let's say if there are about 150 trading days in the entire year, you're supposed to trade it only for 20% or 30%, which comes down to 30, 35. And you're actually agreeing to this particular maths of options buying. I hope you're getting the point over here, right? So let's go and talk about this re-entry system. Day high breakout re-entry. Current day high, current day low breakout above or below the zone is a confirmation of momentum in the market and usually leads to strong one side momentum. इसका मतलब बहुत सिंपल है. For example, यहाँ पे आपने previous day high mark किया हुआ है. This is your previous day high. This is your previous day low, right? The market is now trading. It breaks the previous day high or it's trading above the previous day high, right? And then when it retraces back and then breaks the day's high, right? This is called as a very, very strong momentum for Bank Nifty. And especially if you're an options buyer, you need this kind of momentum. What happens over here? Now, this is very different from N pattern because I'm talking about these breakouts which happens in the late afternoon as well, right? This is called as a re-entry system. Try to understand this, right? But the point over here should be, Jay, what exactly is a day's high once the markets are trading above the zone? The zone is nothing but your previous day high R1 or previous day low S1. This can also be a day high. This can also be a day high. This can also be a day high. So anything can be day high. How do we make this particular day high breakout system in a very objective and easy manner as a trader? So it becomes easier for me to trade as and when there is an opportunity, right? So let's go and read out the rules. Well, follow a simple rule that after the breakout, what is the breakout over here? Either previous day high R1 or previous day low S1, right? If market retraces below or above the EMA, let's say the market has given a breakout and it comes down below the EMA. What is the EMA over here? 15 EMA. Then you mark the day's high, and if then the day's high is taken out, you can expect what? Strong upside momentum. And same is the case with strong downside momentum. I will also be showing you some examples so that you understand the concept in a very easy manner. Let's go and have a look at today's Bank Nifty chart if we can. I've added exponential moving average over here. Now what I'm doing over here is simply I will go and make it 15 EMA, right? This is 15 EMA, the re-entry strategy. right? If you see over here, what has happened? Everyone, what has happened? Market broke the previous day high, right? Let's also add the pivots over here. System is once it breaks the particular zone. Now get this thing very, very clear, right? What is this? The market breaks the previous day high and R1 in this candle. And then what do we want? We want, everyone focus on this. We want the market to come back below the exponential moving average, which is, let's say, this case. And once the market comes below the exponential moving average, we are going to mark the day's high, which is this in this case. Once a candle closes above the previous day high, we will go long. And you can use the same exponential moving average to trail your position, or you can, probably keep your SL over here, exit over here. So exiting a strategy, you already know how to exit it. But in this particular case, because these are rare trades, I want to hold on to these trades for a longer period of time. So the good thing is I am recording this in the live market. So you're getting an understanding of how we do this, right? We will do a bar replay. Let's do this bar replay over here. Correct. So let's say this is the breakout area, right? Market breaks the previous day high and R1 in this candle, right? Whichever is the candle, right, over here. And now you will just simply wait for the markets to come below the exponential moving average, which is this. See, again, this is not breaking the moving average, right? So a candle has to close below the moving average. That is going to be the plan, right? So as you can see over here, we have one candle, which is this candle, which is now closed, right, below the moving average. Now you simply want the markets to close above 34,156. As soon as one candle closes above this particular range, we will go long, right? I hope it is clear. Now let's see. Perfect. So we have one candle closing over here. So you can enter long over here. You can put your SL over here, or you can simply use the EMA as well to, trail your position. And you see, we see really, really strong momentum coming back, right, in Bank Nifty. So again, HDFC Bank is trading near day's high. So that is one of the reasons that we are seeing this strong momentum. And if you see, market keeps on now making a new high as we speak. So I hope you've got this point over here. Let's go and see some examples. And I will take you to the month of October last year, where we, just doubled and tripled our capital, right? Now let's again go to this over here. We will follow a simple rule that after zone breakout, if market retraces below the 15 EMA, it simply means that the candle should close below the 15 EMA and again gives a day high breakout. Only then we shall consider as day high, day low breakout. I hope it is clear, right? This is very, very simple. Now re-entry trigger, obviously this is one setup on its own, and the probability is very, very high. So if I take you to the Excel, which I was talking about yesterday, you will see one thing over here that, the probability, right? The probability for re-entry is very high. If you see in re-entries, three re-entries failed. One was break even, 11 gave profit. So the hit rate for you is huge. It's huge, right? It's going to be like really crazy. So, and that too, the targets that you will achieve are also on the higher side. Let me see if the re-entry profits have been mentioned at the end of the data. So the re-entry profit have not been mentioned in this backtested data, but you've got a point that the re-entries, they are very, very high probable. Reason being that when the market goes up, the weak hands, right, they usually exit in this retracement, and the big boys, then they start moving the markets higher and higher. This is the main logic behind the re-entry being so strong. Now, let me do one thing. Let me take you to the Nifty Bank chart actually in the month of October last year. If I can go, I'll just check it, right? Let's do it. 21. So I'll show you this one trade which we had got, and our capital just went like boom, right? So we just, okay, perfect. Now let's say it's 3rd of October over here, right? We're simply going to go and back test this. Let's say the market opens above the previous day high R1. What you will do is you will simply mark the current day high. Can you see over here? So the market never, in this case, what happens? Market broke the previous day high. It comes below the EMA. You mark the day's high. If the candle closes above day's high, then you enter, right? Let's go to the next part over here, right? In this case as well, if you see, market broke the day's high over here, right? And then there is this one candle, right? Okay, sorry, no candle has closed below the EMA. So you will not get a chance to mark the day's high. Let's go back, right? Again, over here, if you see, market broke the day's high, it comes below the EMA. So you will mark the day's high. You get an entry over here, right? So this is your entry, right? The EMA you can use as your stop loss. So in this case, your stop loss has been triggered. Let's go back and have a look at some more examples. Correct. Okay, perfect. We have got one more over here. If you see, this is the market broke the previous day high and also the R1, it comes down. You mark the day's high, there is a breakout and such strong momentum for a very small SL. Can you see very small SL, very strong momentum on the upside? The hit rate is going to be higher in this particular setup. Again, look at this. We actually caught this. Market breaks the previous day high, it comes back inside the range. What do? It comes back, below the EMA, you mark the day's high, let the market give a breakout. Once it gives a breakout, just see the strong momentum that you are seeing in the market. And this is the power of this re-entry system. I hope you have got the point over here about this particular setup. Kindly do your own backtesting, and this is very, very good for option buyer. If you're an option buyer, you can certainly do this. With option selling, obviously every setup is going to work, right? But with options buying, this is going to be amazing. You already know what option to buy, how to trail, which chart to explore and all of that. But it's an amazing setup. You should try it, right? The re-entry is very high probable. And let's say you're an option seller, and if you want to try options buying, then this is the best setup, because in the entire year, you're going to get only 30 trades. And remember one thing, 30 trades out of 150 trades is 25 to 30%. And this is the probability of options trading. So you are on the right track if you follow this one setup as an option seller, right? Why I'm saying as an option seller, because if you want to do options buying, then you can do this setup. I hope you've got the point over here. We'll just see some examples over here. Re-entry system. As you can see, market broke the previous day high, and R1 market again comes back below the EMA. You enter as soon as the day high is taken out, and then we see this strong momentum, right? So you'll be able to capture all these big moves. You just got to be a little patient. Again, if you see over here, market broke the previous day low S1. Again, over here, the market breaks the PDL, and then you see this strong momentum coming on the downside. So these are very, very simple setup. You just got to focus on this, right? Now, why re-entry is highest probable? We understand that a stock does not move like a lift. A trend is always accompanied by small retracement and pullbacks. In these pullbacks, the big boys actually shake out the weak hands like us, retail traders, and then the move is going to continue. And re-entry opportunities, they're very rare, right? In the month, you will see like 3 to 4 opportunities. That's it. Right, that's now entry and exit trigger for options buying, right? We're talking about maximum 2 re-entries, right? Now let's just get this done over here, right? Idea is day high, day low breakout beyond previous day high and R1 and previous day low and S1. Exit trigger is very simple. You can either keep it open till day end, or you can use the 15 EMA or the retracement as your trailing SL. Strike price is at the money. You will go with weekly expiry as your expiry. ठीक है, ये सब आपको मालूम ही है, हमने ऑलरेडी हमारे ऑप्शंस के सेशन में इसको डिस्कस कर दिया है, right? Some learners also use a 10 EMA. It is completely up to you what you're comfortable. The entry is clear, the stop loss is clear. Exit, you do it as per your own trading psychology, right? But again, for me personally, leaving trades till day end has worked out very well. Okay, again, I think we have spoken about everything over here. Index trading psychology, again, I would recommend that if you want to practice it, start with stocks, because in index, the position sizing is very tricky, right? Why position sizing is very tricky? Because you are not trading in fixed quantity. For example, you cannot adjust the quantity as per your risk, because the minimum quantities, if you want to trade Nifty, is 50, and let's say the stop loss comes to, let's say, 40 points, then you have to take a minimum risk of 2000. Correct. And same can be the case in terms of Bank Nifty also, right? So I hope I've covered all the points over here. Everything has been mentioned in the PPT as well. The previous day high, R1, previous day low, S1 setup, along with the N pattern, the re-entry pattern. So this is basically a trend trading system. So if you understand, it is very different from the base formations that we did, right? Base formation, a person thinks, okay, I'm a reversal trader, I just want to take the reversals. But when it comes to this, right, when it comes to this, we are simply, looking forward to ride the trend. And that is what something which works out well for me, right? And this is what I do. Yes, this year has not been that great, but that's all right. I mean, we are traders. We cannot expect markets to respect our setup all the time, right? Just when the setup is working with you, is working for you, you stick with it. And when it does not work for you, just sustain the market. Do not make the mistakes of trying new systems, or just giving up on the system and all these things, right? So I hope you've got the point over here. Thank you so much, guys. And yes, if you have any doubts, just let us know in the comment section, or you can just connect with me, and we will also have a doubt solving session as well. Thank you so much, guys. Thank you. And first thing first, also backtest it. I've already shared this particular backtesting report with you, so you can also do your own backtesting. This will really, really help you. With that note, thank you so much, guys. And yeah, this is the end of the session.